Tom Forte of D.A. Davidson joins us to share what he's watching. Just last week, reiterated a buy rating on Apple and on Amazon. So, Tom, which one do you prefer? The show after Fast Money likes to play Would You Rather. Which one would you rather?
Yeah, I prefer Apple. I think the challenge for Amazon is consumers are clearly spending their money. The retail sales data is good. They're just not spending on e-commerce. They're spending on travel. So of the two, I do worry for both that they have a high proportion of their sales coming in the U.S. dollar. So I think there's a possibility one or both would miss on the top line, given the strength you see in the U.S. dollar. The benefit for Apple is with the supply chain improvements we've seen this year versus last year, they should be able to have more and better sales of iPhone 14 than they had of iPhone 13. And then for Amazon, the good news is that their cloud computing business is doing well. Their advertising business is growing. Those are higher margin. But I'm very concerned that they decided to have a second Prime Day in one calendar year. I think that's a reminder of how weak e-commerce sales are. So of the two, I would lean toward Apple.
The stocks have sold off in reaction to Alphabet and reaction here to Meta. Is there any real correlation besides maybe just ownership, hedge fund positioning, that sort of thing, where you can extrapolate what those reports mean?
I think there's correlation to the extent that what you're seeing is a lot of weakness in digital advertising. And that has, some of it's because of Apple's influence. But Apple and Amazon generate revenue from digital advertising. But really what you're seeing is weakness in kind of mega cap tech. Think of Google, Alphabet, Meta, Microsoft. And I think that is very worrisome for both Amazon and Apple.
Mike Santoli, how do you see the two positioned?
Well, what's interesting is you have an investor base right now, because of everything going on in the other companies, that is very acutely focused on return on investment. Let's run a tighter ship. Amazon has kind of been moving in that direction in recent quarters of trying to essentially say we overinvested. We're taking a little bit more of a sharp pencil to expense. So we'll see if that theme runs through here, in addition to all the obvious concerns about whether cloud demand is flagging and how the consumer is behaving. The fact that Apple numbers have not really changed very much, the forecast in months, I think is kind of interesting. People assume it's going to be stable. We'll see if that comes through. It's probably good that it's down 3%, the stock, heading into that number.
Well, yeah, I was just going to ask, Tom, where expectations are mismatched in terms of reality, because the expectations around Amazon is that the e-commerce business would slow and maybe some slowdown as well in cloud and advertising, but I don't know if they've moved as much for Apple.
No, I think it's a great question. If you look at the multiples for both companies, that come down quite a bit. You think about some investors who believe that we're kind of at peak hawkishness right now, so we'd expect a rally if either of them can say anything that's anything good. But I do think that the weaker e-commerce for Amazon heading into what is its biggest e-commerce quarter, the fourth quarter, that should have a dampening impact on their profitability in general. So I think it's a little more challenging for Amazon right now.